Welcome into a brand new episode of WSI TV. Enjoy the show.
Hi guys, welcome back to WSI TV. We're here for your market update every Monday. As you'll see, Jim's not with us this week. Unfortunately, he's feeling a little under the weather, so we've got Tayler here with me filling in this week. So we'll do our best to give you the best market update, even though Jim's not around. So if you want to just jump right into it.
Yeah, of course. Like you said, we've kind of just been looking at the general market just to kind of capitalize on this video. But as you can see in the past week or so, the Dow, the NASDAQ, and the S&P have hit all-time highs, which we've been saying that for quite a long time now, this fall and the past winter. That's been something that we've been tracking in the market for sure.
Yeah, so the S&P is actually up 11%, and the Dow is gained just under 9%. So that's some pretty big numbers for the last quarter.
For sure, especially for indexes like that.
Yeah. Fourth quarter is always a big surge historically, for the stock market and for these big markers. But this year especially, it's just been really, really strong. And you can see it in the S&P behind us. You can see there's just this really big surge through November and December, particularly in December. And it looks like we might be starting to level out a little bit as we move into the new year, but that's to be expected after.
Which is a good thing, though. Yeah, which is a good thing at this point. I mean, you guys heard Jim in the past couple of weeks say that he's expecting maybe a correction in the future. We are going to talk a little bit about today that the headlines have kind of caught up with where we've been since September. They've decided, oh yeah, we are in a bull market. But so usually that kind of thing lags behind the actuality of what's really going on. So now we're kind of looking at maybe this is going to slow it down a little bit. Now that everyone's catching on, this could be something that may change the market sentiment. We don't know, but again, we're just going to keep looking at the numbers and following our system because it doesn't really matter what the market does. We're just going to react accordingly when our triggers are hit.
Yeah, so actually 44% of big market investors are now jumping on the bandwagon and investing because we're calling this bull market. Yes. And so that has a lot of people worried that usually when it becomes common knowledge that we're in a bull market, everybody thinks that means that the bull market's about to end. But in this case, we think that there may be a bit of a correction in the near future because that's a healthy thing that the stock market does. Actually, if you look back at the beginning of 2019, we had this huge surge right here, and then it did correct, but it continued to overall keep moving up. And now we have this other surge that looks very, very similar to the 2019 beginning of the year surge. So that might continue a little bit further and then bounce back. But either way, we're looking at a strong market, and there just might be that small correction moving forward.
Yeah, so that's just something to keep your eye on, but no need to panic right now. We're going to keep coming at you with updates for that. But moving on, kind of zooming out a little bit from the market in the United States, we do talk about trade relations quite a bit on our channel. It is something that's been huge in the headlines this year as we're coming into 2020. Everyone's kind of going, what's the situation? What's happening right now? So I'm sure you've heard that we've reached a trade deal with China, but that's not the end of it. That's still only the first step in that resolution. And we do still have tensions with the EU and the trade relationship between us and the European Union. So that's something we're going to have to keep an eye on for sure as we come into the new year. But
so the new negotiations have come out, and it looks like China's going to be buying about $2 billion more in our goods. So that's a really, really positive start.
Yes.
But that still doesn't make up for the deficit that we have with China specifically. And as Taylor said, the tensions continue with the EU. Although that's not as big of an issue as China because China is our biggest trade partner. So we'll just have to see where that goes. But there might actually be an upside. In 2008, the majority of the country considered trade to be more of a threat to the economy than an opportunity. But now 74% of Americans view it as an opportunity for growth. So this changing of trade standards might be the start of something really great in the future.
For sure, yeah. And speaking of the future, it is the time where people do like to reflect on the past. We are looking back at the decade of the 2010s, and we've just seen that even though we had that recession that was kind of plaguing the mid to the end of the decade, we are trying to look at the positives in that. 2010s were actually a good time for the market after the 2008 recession, and we had the longest bull run in history in the past decade. So that's obviously a huge milestone for the market just in general terms.
Yeah, absolutely. And you can see that in our chart. You can see this huge bull run that had already started in 2016, but it's still running.
Which is off our chart over here. Yeah, so it started back there.
It's still going up. So a big run. It actually, the S&P returned nearly 200% this decade. So that's a really, really strong number. That's unheard of. So we're really happy with that. And hopefully we can continue to get really good gains off of that in the new decade. The longest bull run. Despite the recession in the 2010s, we had this really strong return, and that was the big fear. Is the recession was huge, and it rivaled with the Great Depression in the headlines. So everybody was terrified of that. But the fact that we recovered so well is really encouraging.
For sure, yes, and we did see some growth there too. In 2007, the share of all money in the U.S. stock market and index funds was only 19%. Which may sound good to you depending on what kind of metric you're going based on. But in 2017, we went up to 43%. So that shows confidence in the market and people that are putting their money into the stock market and into domestic funds, which is a good sign when you're trying to boost that sentiment towards the stock market. That's definitely a good number for us to be looking at there.
Yeah, absolutely. And another thing that we were looking at is 20% of Americans have recovered from the pre-recession deficit, but that means that 80% of Americans have not entirely recovered. So that's kind of a scary number. Everybody's still kind of feeling it. Whenever anyone mentions 2008 or the recession, everybody kind of shakes their head and the mood in the room kind of drops a little bit.
Yes.
But these numbers are really encouraging. With that change from 19% to 43%, that means that people are going in on the market, people are investing, people are starting to gain back their wealth. And especially with the longest bull run in history, that's really boosted us. And it does take time to recover from any kind of drop in the market, whether it's small or it's as big as the recession in 2008. So even though the outlook might look dire to some people, it's really, we're in a good place now. And employment is still resting at that 50-year low. So all around, things are really strong.
Yes, yeah. So don't fall for the headlines. They might be touting positive things right now, but you know, they like to go back and forth. They'll do their pendulum. But we do have some strong numbers for you just to rattle off them in a moment. We do have, in quarter 2 2019, the top 1% held $34.7 trillion in wealth, and the bottom 50% held $2 trillion. Do you want to talk about that discrepancy for us?
Yeah, so that's a pretty big and widening gap. It's been widening for the past 20 or 30 years, possibly even a little bit more than that, but it's become really visible this century. And so what we're hoping looking into 2020 is that's going to slowly start to change. A lot of people are saying that the trade relation shift might actually affect that because a lot of that wealth is coming from international trade and international business. And since we're trying to move things back home, that might move the wealth back home to that smaller percentage.
Agreed, yes.
Well, it's technically the bigger percentage of Americans, but
yes,
smaller percentage of
but
wealth.
The smaller percentage of wealth, yes, the distribution.
Hopefully this will be our decade. And then we just wanted to talk a little bit about the root of that inequality, and it really is, to a large degree, the growing globalization, because it happened really fast. Technology took the world by storm. Global relationships took the world by storm just in the last 50 years. And that's a big shift, and we're still figuring out how to adjust to that.
Exactly, yeah. I mean, and it's on the same terms as with the recession. We're still adjusting to things that have changed in the market, that have changed in the economy. And that's not something you can adjust to overnight. Whether it's 5 years or 10, you're going to need time to get used to the difference in things you're spending on, the things you can save, interest rates, all these things that you may not realize you're impacted by, but fiscal policy, global trade, things like that, you think that goes over your head, but as an American, it really can impact you, even when you think it won't.
Absolutely. And I think that's about everything that we had for you guys today. But thank you so much for joining me, Tayler.
Of course, yes. And we wish you a preemptive Happy New Year. We'll see you very soon. But
yeah, it'll be 2020 the next time.
It will.
Actually, it'll be on the New Year's.
Yes, our next video is on New Year's, yes.
So we look forward to seeing you. As always, remember to go on WSITV.com and subscribe to all of our free newsletters and content. And we'll see you soon.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.